Hello, my name is Stuart Keller, and it's my pleasure today to talk to you about credit cards. So what is a credit card? Credit cards are a plastic or metal card that allows access to a line of credit offered by a bank or other financial institutions. Each time you pay for something with a credit card, you are borrowing money from the bank, which then has to be paid either in full at the end of the month or over time. You need to know about credit limit and available credit. Credit limit is the maximum amount you can owe the bank at any one time. Your credit limit will depend on your income, your other debts, and your credit history. The available credit is the amount you have left to borrow given the current balance on your account. After you make a payment, you have more available credit to borrow again. How do credit cards work? When making a purchase, insert your credit card into the card reader at the store or provide the card number, expiration date, and security code for online orders. The payment network, like Visa, MasterCard, Discovery, and American Express, will process the credit card transaction, pay the merchant, and ensure that the cardholder, you, gets billed. When your bill comes, you have the option of paying a certain minimum amount, paying the whole balance in full, or paying some amount in between. Credit card interest. APR, which stands for annual percentage rate, is the annual cost of borrowing money with a credit card. Market interest rates, your credit history, and the type of credit card you own will determine the interest rate on your card. You will have a certain amount of time to pay back the entire amount you have borrowed before being charged interest. The period of time before the interest is charged is called a grace period, and this is typically between 21 and 25 days. Although you are only required to make a minimum monthly payment, if you don't pay the entire balance before the end of the grace period, a finance charge based on the interest rate is added to your balance. Credit cards versus debit cards. Although they look alike, credit cards and debit cards function quite differently. For credit cards, you borrow money from the credit card issuer, typically a bank. You can make purchases by borrowing money up to an established amount, which is your credit limit. Once you pay down what you've borrowed, you can borrow again up to your credit limit. Some credit cards allow you to access cash by taking a cash advance, but these transactions tend to have a higher interest rates. If you have a fraudulent charge, the credit card company will remove the charge. Now for debit cards, you're using money from your account to pay for your purchases. Money is electronically deducted from your checking account at the time of your transaction. You can also take money directly out of your account at the ATM. To use a debit card, you will need to enter your PIN as part of the transaction. If you are the victim of fraud, the bank will need to investigate it before money will be put back into your account. Rewards credit cards. Many credit cards come with incentives to encourage you to spend more using their card. Rewards credit cards allow you to get something back for each purchase made. Common rewards include hotel and airline branded miles, travel rewards, cashback, and store credit cards. Hotel and airline branded miles give you miles or points that you can redeem for free flights or stays with the card's partner airline or hotel chain. Travel rewards, these give you points that can be used to pay for travel expenses. Cashback, you get money back as a check or a deposit into your bank account, or you can use it to reduce your balance. And finally, store credit cards. These reward you for loyalty by giving you discounts or other benefits for shopping at that store. Now you should choose rewards cards that match your lifestyle and spending habits, and be sure to look at the fees and the rates. Rewards credit cards tend to have higher APRs, interest rates, so try not to carry a balance on a rewards card. So what's the cost of carrying a credit card? Because there are costs. You have to consider interest payments, annual fees, late payment fees, and foreign transaction fees. So for interest payments, credit cards have different interest rates, APRs. When you pay in full each month, your purchases won't accrue interest. Some cards have annual fees. Also, you can be charged a late fee in addition to the added interest charge on your balance. And finally, many cards add a surcharge on transactions made with a non-US merchant. Most of these fees can be avoided by paying your bill in full each month. So finally, what are the responsibilities when you have a credit card? You should only charge what you can afford. you should stay within your credit limit. You should pay off your balance in full each month. You should compare different cards to find the best interest rates and rewards. And finally, each month, ensure you review your statement to make sure all of the charges on your statement are legitimate. Thank you for taking the time to listen.